Tesla stock could be on the verge of a major explosion to the upside. We're going to talk about the catalysts that are going to be coming over the next couple of weeks and months that could help cause the stock to make a huge move higher, guys. We're also going to get into what's ahead in this next upcoming week as far as earnings, as far as economic data that can also move around the broad markets as well as Tesla. So let's get into it, guys. The only thing I ask you to do, if you like making money, if you like Tesla stock, or you just like the broad markets, if you want to stay up to date with what is going on, to hit that like button and subscribe to the channel because they are free 99. So first things first, guys, Tesla has seen its share price go down quite a bit. I think this is pretty well known in 2022. If you've looked at the price of Tesla, if you've watched the stock for a while, maybe you've wanted to buy the stock for a while, but it was too expensive. It just kept going up, for lack of a better word. Well, you possibly have found your opportunity to do so. And before we kind of dive into some of the catalysts that can make Tesla go up, let's briefly talk about some of the things that could make Tesla go down. And the biggest one, which might not be an obvious one, is the growth rate. Tesla's valuation can change dramatically based off of its growth rate. And what we've seen as of recently is encouraging. Tesla cutting prices for their vehicles is looking like it's spurring a lot of demand, which is very good, should boast well for first quarter of 2023. Nevertheless, if Tesla were to grow at 50% in 2023, buying Tesla at current prices would make you look like a genius. Now, if we go into a hard landing and the economy goes into recession and people stop buying vehicles and Tesla only grows at 20 or 25 or 30%, it's an arguable valuation. That's why the growth rate on Tesla is the most important thing when investing in this company. Obviously, if you're buying it for the next 5 or 10 years, doesn't matter as much. If you're in it for the next year or two, or you just like to see some gains over the next year or two, the growth rate will be what matters. And that's ultimately the one thing that I think could push Tesla stock down further. And for a lot of reasons we've talked about over the course of weeks on this channel, I don't think that is going to be the case. And like I said, what we're seeing so far in 2023 is some encouraging things about demand. So let's get into the positive things now. And some of these are going to be things that you already know about, right? Some things maybe not, and we're going to provide some clarity on all of these things. So we're going to go ahead and pull up the notes that I have beautifully written out for all of you guys. And number one is the new factory announcement. And this is big for multiple reasons. One, it will allow Tesla to make more vehicles that it can then sell. That's pretty straightforward. But if Tesla is investing in its business at a time where people are fearful about a recession, where the average consensus is we are going into at least a mild recession, the fact that Tesla is actively investing in their business during that shows a great deal of confidence from Tesla management that things will be okay at Tesla. So that's a big reason that I think would cause a big movement to the upside. And there's a couple different places this could occur. We heard that the Texas factory, the Austin factory, is being upgraded by about $700 million. So that's going to add a lot of capacity to that factory. That is obviously a bullish thing. And the day that news came out, Tesla seen its best day of 2023. So I don't think this is a long shot to expect a bullish, couple of days, a bullish rally, couple of weeks, right? When this announcement does come out, we know it could be in northeastern Mexico, which would be good for obviously their California factory, their Texas factory, very close. You also got cheaper labor. You have more access to those raw minerals that you need to actually produce Tesla vehicles. And that's where you could actually see a lower priced model actually be produced. So that would be a good thing fundamentally, right? If they're announcing and building another factory in northeastern Mexico. but also Indonesia. We have gotten reports that potentially a factory is going to be going up over there as well. And Tesla, they're in a position to be growing like that, especially if they can grow their revenue and grow their earnings in 2023 as well. They will have no problem even doing 2 factories plus the addition to their Texas factory all at the same time. So I don't think that would cause a negative reaction to the stock, even if they announce both factories at the same time. It could, though. They're spending money. Investors might not like that. Small chance they wouldn't like that. Now, there's not too much else that we really know about these factories as of right now. We would expect them to produce about 1 million vehicles apiece, in theory, if they both were produced, but each factory roughly 1 million vehicles a year, which Tesla only produced 1.8 million vehicles and sold 1.8 million vehicles in 2022. So that would be a huge jump and would add a lot of capacity for Tesla. Number 2, if you have not read it already, is Elon quits his job as the Twitter CEO, guys. And I think this is probably the most powerful catalyst that we could get, because a part of Tesla's share price decline has been due to Elon presumably spending too much time at Twitter, not focusing on Tesla as much. So a lot of investors don't like the thought of Tesla does not have an active CEO in the day-to-day operations with their company they're investing in. Obviously, if it was a different company too, if it wasn't Elon himself, like Snapchat or any other company, and they didn't seem focused on Snapchat or that other random company, you would kind of act accordingly, right? That's a risk, and that's being priced in the stock. That has already well been priced in the stock. And I think it's safe to say Tesla probably wouldn't be so depressed as far as the share price if Elon never bought Twitter. And I do think Elon is actively working to try to find someone that fits the role to run Twitter. And I think this is only a matter of time. And obviously I could be wrong. There's no definitive details on this. We haven't heard anything about this, but it's clear that it's coming eventually at some point in 2023. And if I were to go out on a limb, that probably causes a 20 to 25% green day immediately once that happens. And then the third bullish catalyst is earnings. And why I put this on here is because Tesla is unique in the sense of they report their delivery numbers before they have earnings. So at this point, from Tesla's earnings, from Tesla's deliveries, we already know the deliveries. It was a record deliveries. We expect a record quarter, but you already pretty much know what the earnings are going to be. Average selling price for a vehicle. We know their profit margins, right? So we know what the numbers are roughly going to look like. The biggest thing is going to come from the commentary. And I think the commentary could give you that bullish reaction as well. More details on the factory, presumably the northeastern Mexico factory or the Indonesian factory. Also could get new announcements on Elon stepping down from Twitter. Probably not going to happen, but it's a possibility. Long story short, we already know what to expect from earnings, so that earnings risk is out of the way. Unlike an Apple or a Google or an Amazon, we don't get their iPhone numbers ahead of earnings. So when it comes down to earnings, there's a lot of front-running risk in that maybe investors hear something they don't like and caught off guard, and you get a black swan event, right? Anything's possible. And that is why that is a bullish catalyst from this point on. So those are the 3 big catalysts that will be coming at some point in 2023 that will help out Tesla stock. And if you're buying it near its 52-week low, I think it's going to be pretty hard to lose on Tesla throughout 2023. I don't want to say it's for sure money, because nothing is for sure in the stock market. I'm not a financial advisor, so I cannot even start to make that claim. Even if I was, I would not make that claim. But fundamentally speaking, you're probably okay legging into a position in Tesla right now. Now, another concern that I have is not with Tesla, but with the broad markets. So with the broad markets, we are expecting a lot. So for 2023, investors are expecting growth of 4% for earnings. This is profits, money in the bank. We're expecting earnings to grow to $228 per share. So what does that look like on a price to earnings multiple? Well, let me tell you right now, it's not pricing in a recession. Even though JP Morgan, Citi, Bank of America, these banks and overall analysts are saying recession, they're not actively forecasting that in the earnings, which is really showing you this stock market is in a big disconnect. So I think it's going to put a lot of importance on upcoming earnings. And for an example, if we are expecting earnings of $228 per share at a 17 times price to earnings multiple, that puts the SPY, the S&P 500 ETF, at a fair value of $387. You're sitting closer to $400, right? So if you do 228 times 19, then you're sitting at 433. If you do 228 times 18, you're sitting at 410. So you're about a 17.5 times earnings multiple right now. Whereas if we do go into a mild recession, or just if earnings go through a recession, you don't have to see an overall recession to get an earnings recession. Well, that PE could look a lot worse, because let's say the S&P gets $215 of EPS for 2023. And you give that the same multiple that the S&P is trading at right now. That would put the S&P at 376, which would be a decline of almost 10% from where we currently sit. Now, if you say multiples go down because investors are fearful, they're not willing to pay up the same for the same amount of profits, that's where things get really ugly. Or if earnings come in at 210, still at a 17.5 times PE multiple, now you're at 367. Now you're almost retesting the October lows. And that's without multiple decompression. Now, another risk factor, and just showing the markets are disconnected from reality, is the last FOMC minutes we got on January 4th, 2023. Quote, Fed officials at their last meeting in December deemed that additional rate hikes in the coming months would be appropriate to help slow inflation, and none of them anticipated it would be appropriate to cut rates this year, whereas the bond market is pricing in 1 to 2 rate cuts by the end of the year. I don't think the market is going to be right this time around, and even if the Fed just keeps rates where they are, then that's a problem for the markets. That means a 17.5 times multiple is probably not appropriate. So that's a big risk I still see in the markets right now. And that's why earnings, this earnings season, will be so important, because odds are you're going to get a lot of full year guidance coming out from companies. And when you start to get full year guidance from, Apple doesn't typically give a lot of guidance, but if they do, if Google does, or Amazon does, or these companies that control a vast majority percentage-wise of the S&P and the NASDAQ, if they start guiding down huge for 2023, in which I think will happen, then you're in for a problem. Doesn't necessarily mean Tesla or any one stock would have to go down, but it would put a lot of negative pressure on the overall markets. Now, for this upcoming week, on Monday, you have UMC. Markets aren't going to be open for trading, so that's one you really can't do anything about. On Tuesday, markets will be open for trading. You have Morgan Stanley, Goldman Sachs, and a lot of other banks, smaller banks, that report pre-market. Tuesday after hours, United Interactive Brokers. That's pretty much it. Wednesday, you have PNC Bank pre-market and Charles Schwab. Wednesday after hours, you have Kinder Morgan, Discover, and again, more banks. Thursday pre-market, you have P&G and more banks. This is like the the week of banks, guys. Friday and this week, a lot of these companies are banks. So Thursday and after hours, that's where you get into your first big tech stock, and that is Netflix. That's going to be the big story of this next week. And depending on what Netflix says, the stock has recovered a lot. It's back above its gap fill level from last earnings where they dropped off a cliff, right? Netflix had that back-to-back drop. It's back above that level. So there is a decent amount of good things priced in for Netflix in 2023. And depending on what they say, what their guidance looks like, that will move the markets in a massive way. Now, after this week is out the way, next week, that's where you're going to get a lot more of your tech stocks that will be reporting earnings that ultimately could bring down the markets. And even if you look here, the average consensus from analysts, from investors, is that the first half of 2023, the S&P 500 is expected to retest the lows of 2022, but a pivot from the Fed could drive an asset recovery later in the year, pushing the S&P 500 to 4,200 by year end. And hopefully you could see the disconnect that is going on in the markets. At this point, either earnings have to grow. Earnings have to grow. We cannot contract from 2022 levels. You have to grow 5 to 10% earnings in 2023, or the markets are in for a real, lack of a better word, a shit show. You have to see the Fed cut rates a little bit by the end of 2023, or signal early in 2024 that they will be cutting rates. If that does not happen, that is a risk for the markets over the near term, really the whole year, and that's a risk for Tesla as well. Even though I think Tesla has priced in a lot of these risks, maybe not all of them have fully been priced in. Now, if we take a look at the economic calendar as well, Monday, you don't have anything because it is a holiday, MLK Day. So, yeah, we're not going to really have anything for Monday. Now, for Tuesday, you're going to have Fed Williams that speaks at 4 p.m. Eastern Standard Time. That's basically going to be it. You really don't have anything as far as economic data. You have 3-month bond auctions and 6-month bond auctions. Can move the markets briefly, but it doesn't tend to be a day or multi-day long event. Now, on Wednesday, that's probably going to be the biggest set of economic data we're going to get. PPI month over month for December coming out at 9:30 in the morning. I believe it actually comes out at 8:30 in the morning. This might be based off of Central Time, I want to say. But PPI month over month, we're expecting a negative 0.1% reading. Previous reading was for a 0.3% gain. So you're expecting a lot of producer price inflation, deceleration. You're in deflationary territory at this point. That's what the markets are expecting. Inherently, there is a risk there if you don't go into deflationary territory. If it just comes down, it's still not good enough. The markets are expecting deflation. You get PPI month over month and year over year, as well as core PPI year over year and month over month. The month over month numbers are going to be much more important. Now, you also get retail sales month over month for December and year over year as well. Get this, retail sales month over month for December, you're expecting a negative 0.4% reading. Last month, you were expecting negative 0.8. You got negative 0.6. So you're still expecting a decline month over month in retail sales. And it's hard to say. December is obviously a busy month. If you get a decline for December, it might not be seen as a positive thing for the stock market. Now, you also will have at 9 o'clock in the morning Fed Bostic that speaks, and then you will have Fed Bullard that speaks at 9:30 in the morning as well, a 20-year bond auction, which might move the markets around a little bit more. Fed Harker that speaks at 2 p.m., Fed Logan that speaks at 5 p.m., and that's going to wrap up your day for Wednesday. For Thursday, building permits, preliminary numbers for December, initial jobless claims for January 14th, housing starts, the Philly Fed, continuing jobless claims, all of this coming out at about 8:30 in the morning. Fed Collins that speaks at 9 o'clock in the morning, a lot of oil inventory numbers that come out. Don't expect that to move the markets really at all. And then at 6:35 p.m. you have Fed Williams that will speak. That wraps up Thursday. And for Friday, you have Fed Waller that speaks at 1 o'clock. But that's it. That's your week, ladies and gentlemen. So you have retail sales, you have PPI, you're going to have bond auctions, you're going to have a lot of Fed speakers. You're also going to have, what was the other one? Building permits. Did I say retail sales? I think I said retail sales. PPI, Fed speakers. You're gonna have a lot. Really, on Wednesday, it's gonna be your big day for economic data, and you do have Thursday Netflix earnings. So it's gonna be 2 days of back-to-back economic data on top of economic data and then earnings. So the end of the week, that's really gonna set you up for potentially that big move, guys. And for the option activity, switching back to Tesla here, on Friday, you've seen 823 orders totaling $3.5 billion, positive order value of 53%. And for this next week, out of the total option activity, the open interest, the amount of contracts held on the option chain or that are currently in people's brokerage accounts, the call sits at 55%, the put sits at 45%. So you are in positive territory as far as the open interest on the call side compared to the put side. And also on a technical basis, Tesla does seem to be in this bottoming formation still with elevated volume. In between 150 and 250 million shares continue to trade hands on Tesla stock. And when you zoom this out, I mean, this is the highest volume consistently that you have ever seen with Tesla. So it looks like there's a lot of back and forth going on here, and you're really setting yourself up, in my opinion, for that rally. And I do think the rally could, in theory, if any one of those catalysts are announced or we even come to earnings, could set you up for that 150 to 160 level for Tesla stock. I think that would be more appropriate than the 120s where it currently sits. And you have seen a lot of bullish indicators as well that have started to flash for Tesla, showing a lot of short-term bullish momentum, guys. So that is all for this video. Let me know what you think of this down below in the comment section. Do you have opinions here? I would love to hear those or see them, whatever you want to call it. And we can go back and forth because there's a lot you can say about right now. There's a lot of different moving parts, and opinions help you grow. And this is my opinion for all of you guys. So thank you for watching. Hit that like button and subscribe to the channel. That is it. You guys enjoy the rest of your weekend, your extended weekend. I will see you in the next one.